Hey guys, welcome to the July Market Snapshot. We are back. Our 2024 real estate market snapshot continues, or forecast continues with July, as we've been doing for 3 years now. This is our QR code. All the slide decks are in the link. Depending upon where you're watching this, you'll have no problem finding it. So we are going to jump right in. It's been a very, very interesting June. Today is July 12th. Hard to believe the year is half over. So jumping into median price, I've been getting a lot of people calling me, oh my gosh, Lance, what are prices doing? I'm hearing prices are down. I'm hearing this, I'm hearing that. Okay, well, you might be hearing they're up, they're down, they're left, they're right, depending upon where you are. This is our 4-month chart. You've got which one's red. Orange County's down a little bit, LA County's flat, Riverside County is down a smidge, and San Bernardino County is up. So what does it all mean? We're just doing our thing. It doesn't really mean a whole heck of a lot. At least at this point on July 12th of 2024, what we're seeing is very, very common when it comes to pricing. So if you guys are into this sort of data, click on the link. It'll give you all that sort of stuff and you can take a look at it. The overall summary on prices, though, is pretty healthy, I suppose. If I wanted to point out one that I didn't like, and again, yes, I said I didn't like it, Orange County up 12%, which, by the way, if we go back a slide, Orange County's at the top. The last 2 months, if you live in Orange County proper, both in May and in June, property values pulled back a little bit. Okay, well, that doesn't sound good, Lance. Okay, well, good, bad, or otherwise, it's still up more than any of the other counties that we track. So even though it's been down the last 2 months, year over year, June to June, up 12%. Why do I not like that? I like it. It's fine. But again, 12% is a lot. Okay? It's a lot. So if I look at LA County at 6.3, seemed a little more reasonable, a little more healthy. Riverside County, 2.2, the worst performer of the four we're tracking, at least in a 12-month window, which is kind of unusual. Riverside, as a percentage-wise, does okay. And then San Bernardino at 7.2. Again, this is just a snapshot from June to June, but even though Riverside County is the lowest appreciation period year over year, quite honestly, I like it the best because it's just healthy, it's sustainable, it's not dramatic. Whereas, 12%, that's still a big number. Maybe not compared to what we've seen in a few other years or a few other quarters. But anyway, so prices are what they are. This is the 15-year chart. If you want it, click into it when you got the deck. I just add a little note. It feels like normal choppiness. So for those of you that have been reaching out to me saying, oh, prices are down, or I've heard prices are down, yeah, 0.5% here, maybe a point here. But then again, if you're in San Bernardino County, for example, values went up last month. If you're in LA County, they were flat. So I don't know. I'm not too exercised at all with prices. Prices seem just fine for where they are. From a supply and demand standpoint, tracking new listings on the market, all 4 counties month over month were down. I hate to see that. I'm a real estate guy. I want to sell some houses. I'd like to see more inventory on the market instead of less inventory. But it is what it is. So for the last 2 months, new listings on the market are down. However, if you want to compare year over year, LA County actually has 8.5% more listings than it did than last June. Orange County is basically flat, 0.04, Riverside about 5%, and San Bernardino basically flat. So Orange and San Bernardino County, because they're exactly the same, basically have pretty much flat inventory June over June, new listings added. LA's up the most, 8.5, and Riverside at 4.9. So again, I'd love to see some higher chart numbers here with higher inventory, but we don't have that. So we've got the last 2 months, we've seen fewer listings on the market than we would like. What does it mean? It just means we have fewer people coming onto the market, but I think we might see some changes with that. So these are the year over year numbers. I just had them on the last chart. I just skipped ahead of myself. So for new listings, 15-year chart. If you want to see them, there you go. And every single county pulled back like we just said. Again, here's our little EKG, and man, we're kind of down here in a low trough. Just to track the top one, this is LA County. They got the most listings out of everybody. But see how consistent it is? I mean, each one of these almost look identical. We trended lower here. We'll see what the next few months hold. But anyway, inventory's low. It is what it is. It's just what we've been talking about forever. This is the part that's the most painful. Every single month, I seem like I'm stuck on the exact same theme. The pendings, buyers and sellers coming together, opening escrows. That's how I pay my bills. And here we are again. So 2 months in a row, every single four of the counties we track have fewer buyers and sellers coming together. Yeah, it is what it is. You kind of sort of see that this time of the year, but the numbers are so dramatically low. It's just truly a painful thing for me, frankly, to take a look at. And look at these percentages. Now, this is June over June. So we were talking prices were basically okay. Orange County is the high flyer with a 12% increase in prices. We're talking new listings, down, but statistically actually a little bit better than where we were a year ago. Well, the pending sales are down 19%, 23%, 10%, 21%. That's sales, guys. Those are people coming together and buyers and sellers and buying houses. Just to put that in perspective, let's just take LA County. At 19%, that's 2,400 open transactions in the month of June, 19% fewer than a year ago. But man, go back to 2020, 4,400 transactions. 4 years ago compared to 2,400 transactions. That's a big number. 3 years ago, 2021, 4,800 transactions in the month of June. This past June, 24. That's half the number of homes sold in June of 2024 compared to June of 2021. So this is why I get so exercised, because frankly, this is how I pay my bills. Now, if you're a buyer or seller, do you care about that? Probably not in the same way I do. You're concerned more so if you're a seller is how my property value is doing. Property values are doing fine. If you're a buyer, are there homes to buy? Well, fewer homes to buy. Interest rates we'll talk about in a little bit. But man, this pending transaction number, it is truly a killer if you're basically in the business of escrow, title, sales, real estate sales, mortgage, all that rest of this stuff. That's how we pay our bills. So again, this is the 15-year chart. Again, maybe this puts it in a little bit more perspective. Here we are way down here. And then look where we've been over the last 15 years. Boy, look at 2012. Isn't that interesting? 2012 was kind of at the end of the Great Recession, if you will, and the foreclosure crisis and all that sort of stuff we had. 2008, 9, 10, 11. Yes, did it last 5 years? Sure it did. And then as we were coming out of that, look at all these sales we were putting together back in 2012. Those were fun times. I enjoyed those. So at any rate, so that's what's going on with the overall unit sales. We've talked about our spotlight city. I don't know why I pulled up Irvine. I figured, what the heck, let's take a look and see what Irvine's doing this time of the year. By the way, let me go back one. All of these links are active. So if you're interested in Irvine, go to the deck. You can go ahead and click on these, and then you can drag your mouse around and you can see all that sort of stuff. The slide I'm going to show you next is not active. It's just a screenshot. And all of those other spotlight cities are available, where if you don't see one you want, just call me. I'll pull one up for you. So wow, look at the median price chart for Irvine. That's I just ran this chart an hour ago. This is the end of June 2024, 2.365 million median price for the city of Irvine. But man, look where we were COVID. We basically doubled. City of Irvine median price has doubled since COVID. Let's just call that somewhere around 2021-ish, late 2020. So what a chart for Irvine. Another thing, don't get hung up on little price go up, price go down, price go up. I mean, look at the choppiness with this. But man, it's just been on a rocket ship. So if you live in the city of Irvine, which by the way, we said Orange County, last I checked, Irvine's in Orange County, I think, yeah. Orange County actually pulled back a little bit, ever so slightly in price. Well, not the city of Irvine. All real estate is local, so got to be careful. When Lance said prices are down in my area. No, I said prices were down in your county, but maybe not in your city. And the same thing could be, the reverse, of course, could be true. So this is the Irvine median sales. New listings, though, not horrible, but they pulled back in the month of June. Again, not atypical, though. So look at Irvine's. This is probably always going to be in November or December. This is always going to be April, May, or June. So we're kind of tracking. So listings are down a little bit in Irvine, but the pending sales, oh my God, look at the pending sales, just fell off the planet. And I mean, literally half. The month before, but Irvine's not that big of a city. So if you go back to last month, looks like they sold a little more than 100 houses. Irvine's not that big of a city, but 100 houses doesn't seem like selling very many. Well, this last month, it looks like they sold little over 50. little over 50 houses in the entire city of Irvine. And if you want to compare it to this, what is this? Oh, by the way, COVID. This here is probably, let's just call that around March, April of 2020, and boom, look at that spike up. We've reached the same stuff we've been talking about for the last few years. So if you're interested in Irvine, all of those charts are available. Click on the link above or below, depending upon where you're watching this. Interest rates. Okay, today is July 12th. If you've been following anything that's been going on in the last 2 or 3 days, as far as the CPI numbers and the inflation numbers and what's the Fed going to do. So I threw Jerome Powell back up here. Mortgage rate volatility, but this time mortgage rate volatility, I get to come with a happy face on because the volatility in the market has basically been helping the 10-year bond, which has been helping the 30-year mortgage rates, and feel a little bit better than we did 30 days ago. Now, I don't know what the stock market's doing today. Yesterday it got wiped out and it'll be fine. I mean, it is what it is. But when the money starts to shift around a little bit based upon, guess what people are doing again? They're projecting some Fed funds rates cuts. Maybe in September, maybe another one before the end of the year. Who knows? I don't know. But what I do know is if you're in the market to finance a house, you're happier today than you were 30 days ago. This is from Optimal Blue, 6.7. I like this chart for no other reason. It gives me a nice little visual. This is where we were about 2.5, 3 months ago. We were back at high 7s, almost 8% back in April. Well, guess what? We're down a good 1.5. We're down below 7, according to Optimal Blue's indices, about 6 3/4. So not too bad. Interesting, I don't know if you guys are experiencing this. I jumped on the old Google machine about an hour ago. Google's mortgage rates have not updated in like 3 weeks. I don't know why. Normally I just go on here and I pull it up. This is what we did last month on June 11th. I went into Google and I said, hey, what are mortgage rates doing today, July 12th? And it didn't give me June 11th, but it wasn't updated since June 25th or something like that. So anyway, we're not going to do the Google. I got to tell you, the only reason I put this one up here, because this is the worst possible place you can go to check what mortgage rates are. But the only reason I put the Google one up here is because I think most of the consumers, if they want to know what interest rates are, they're going to Google. Don't do that, okay? Honestly, where you need to go is come to me or go to Mortgage News Daily. I really like them. They're the best. Very close to what Optimal Blue said. Basically, 6.85. Again, that's almost a half a point better than it was 30 days ago. So, wonderful news. If you're a buyer and you want to get a rate sub 7 and you've been in that market and maybe a month ago you were like, oh man, I'm hearing rates are 7 1/4, 7 1/2, whatever they happen to be. Well, they're better than they were. So we'll see what happens. It is interesting because Chris Thornburg at our market forecast just a month and a half ago is still, well, actually I talked to him yesterday. As far as I know, he is still forecasting 30-year mortgage rates at 7.6% at the end of this year. So as much as I think Chris is fantastic and he's generally correct on most things, I hope he's wrong on this. Having said that, if he is right and you believe what Thornburg is saying, well, guess what? Go out and buy a house today, because in theory it's going to be 3/4 of a point less than what he's projecting at the end of the year. Honestly, I think he may be wrong with that. My gut and what I'm seeing does not reflect a 7.5% mortgage rate on December 31st. I think, let me just to go back a slide or two, I'd like to think that this trend line is going to improve, and we're going to start to see interest rates in that 6.5, in that 6 1/4 range. Nothing would make me happier because that'll help our transaction volume. So at any rate, that's where we are with rates. They've certainly improved. That is the end of my July 2024 Real Estate Market Snapshot. I hope you guys are having a great first half of the year, and we will see you next month.